So if you thought the White House was gearing up to buy more Bitcoin, think again. The latest crypto report policy just dropped, and it's full of regulation talk, stablecoin frameworks, and a few more calls for clarity. But, big but, when it comes to new government Bitcoin purchases, hold the phone, get the crickets, because the silence is deafening. Welcome back to another episode of JRNY TV. This is where we cut through the noise and we get what actually matters. My name is Nick, and today we are breaking down Trump's new crypto report, what it actually says, what it leaves out, and why the market reacted the way that it did. Spoiler alert, the strategic Bitcoin reserve is alive still, but the playbook is more cautious than hype-driven. This is a turning point. The focus is shifting from government buying Bitcoin to government building crypto policy. Let's look at how the report landed, why Bitcoin dipped, and what's really next in Trump's crypto agenda. Report drops, no new buys. The long-awaited Trump crypto report finally dropped, but not with the fireworks that traders were expecting. Many had hoped for a bold new statement about new government Bitcoin purchases, but instead, the report focused on regulation, compliance, and institutional adoption. All fantastic, but leaving out a fresh Bitcoin buy off the table is a bit questionable. Treasury Secretary Scott Bessent confirmed it will have no new taxpayer-funded purchases. Markets reacted instantly. Bitcoin slipped under $119,000, and traders, they dumped on the news. Hours later, Bessent clarified that the government, they could still add Bitcoin through budget-neutral means, like seized assets, and that back and forth sent mixed signals, but revealed the administration's real stance: cautious, deliberate, and regulation first. The bottom line here, the strategic reserve, it exists, but it won't grow through splashy buys. The focus here is on building frameworks first, accumulating later. The strategic Bitcoin reserve. So here's what's concrete. The strategic Bitcoin reserve is official by executive order. Treasury manages it, consolidating all seized or forfeited Bitcoin into one pool. And unlike the old system of auctions, this Bitcoin, it cannot be sold. It's treated as a reserve asset for long-term US use. Growth comes only through budget-neutral strategies, and that means seizures, forfeitures, and other non-taxpayer sources. Meanwhile, non-Bitcoin assets, they go into a separate digital asset stockpile, which Treasury has more flexibility over. But Bitcoin itself, default policy is to hold, not to sell. Recent filings, they show nearly 29,000 Bitcoin already custodied by the Marshal Service, part of what's being centralized under this new reserve structure. The strategy is simple: consolidate, don't auction, and grow without spending taxpayer dollars. No buys, but no selling either. So what rattled traders wasn't just the lack of buying, it was broken expectations. Those speculators had a big bet on a hopeful headline of the US buying Bitcoin. Well, it didn't really happen. And when that didn't happen, the sell-off was fast. But the overlooked detail would be that the government won't be selling any either. And that's a massive shift from the old auction model. And it effectively makes the US one of Bitcoin's largest long-term holders. By locking coins away, supply shrinks, which is arguably more bullish than a long-term buying spree. So while no buys cooled the hype, no sells, it changes the game. And this reserve is designed to function like gold reserves: steady, credible, and untouchable, not a speculative trading account. Market whiplash. So the market's reaction followed a very familiar pattern. Those retail traders, they dumped fast when they found out that there were no new buys on deck. But the bigger players, they quickly realized what the policy really meant. Bitcoin is being legitimized as a permanent reserve asset. And that shift, removing forced selling pressure from seized coins, is flipping the narrative. Institutions saw it as bullish, and sentiment stabilized. In the long run, locking away government Bitcoin is far more impactful than one-off headline purchases. This is classic crypto: short-term volatility fueled by the headlines, followed by deeper recognition of the bigger picture. And the bigger picture here is clear. Bitcoin just moved one step closer to being treated like strategic collateral. Policy first, accumulation later. Beyond the reserve, the report made one thing crystal clear: regulation is coming, and the administration wants it to be pro-growth. The focus here is on the guardrails, not the handcuffs, giving institutions a lot more clarity that they have all been patiently waiting for. But at the same time, the reserve plan still feels a bit incomplete. Will it stay a passive vault, or will it evolve into something like a sovereign wealth fund? For now, it's cautious by design, meant to reassure both the industry of crypto and Washington insiders. The takeaway here is Trump's team is playing the long game, build legitimacy, set the rules, and then let the reserve grow quickly in the background. The game here is optics as much as it is strategy, but it's also proof that the United States is treating Bitcoin as a very serious asset, not just a speculative fad. So where do we land here? Yeah, so that Trump report, it didn't deliver a flashy Bitcoin buying spree, but it did something a little more important if you were paying attention. It locked seized Bitcoin into a strategic reserve, removing the auction threat and confirming Bitcoin's role as a US reserve asset. Regulation is coming, clarity is building, and the framework here for institutional adoption, it is finally taking shape. The reserve plan may feel a little murky for now, but it's just the very first chapter of a much bigger story. Because make no mistake, the world's largest economy is now treating Bitcoin as part of its financial arsenal. That's not just bullish. It is historic. This is JRNY TV. Stay informed, stay early, and always remember that the future belongs to those who start preparing for it today. We will catch you in the next one.